So it's external, ERL, external range liquidity. Be keen on this, please. Be keen on this because it will save you a lot. I told you it's found in old highs. I want to do fast because we have 40 minutes. We will send the meet link after it. So I told you it's in the old highs. Yeah, that's where I specifically said again the old highs. What makes old highs? Mostly you'll find it they are made by a previous day's high. Previous day's highs, the weeks and the months. Yeah. So we are not talking about the highs alone. We are all these include even the lows. So when you come to the daily time frame, the daily time frame, remember that the daily time frame, it's one candle that has 24 1-hour candles, and also as 24 divided by 4, it's 6 4-hour candles. So above every candle, daily candle, sits external range liquidity. Above every day candle, previous candles. Again, weekly time frames. Above every candle sits ERL. There is an external range liquidity. Above and below. When I say above, include below. So you have to mark the highs and the lows, the days, the weeks, and the months, because that's where the ERL sits. Yeah. So when you look at this market on a weekly, we are on the weekly time frame, you mark liquidity. That's why this market has been pumping and pumping without retracing. And mark the low of the previous week. This week of the previous weeks, the lowest point at the previous week reached, you mark it. What do you note? Yesterday, this 5-minute candle, we'll see it. Let me zoom and see where the ERL was swept. It's not a random candle, it's here. It's here. This candle, this one candle, is it visible in your screens? Can you see this candle? It's not a random candle. It came to correct this ERL from the previous week. It came to collect ERL, the external range liquidity that was left here at this particular low, ERL, and closed back. That was a liquidity hunt. So this was a very strong bullish sign targeting the next external liquidity range, that is maybe the previous day, because we said it's found in the week's highs and lows, the days and the month. So we might target the previous day or the previous week as our future take profits. So we are not bearish from this move. When you look at the move at higher time frames, like the 2-hour time frames, here they are. The move started, it was this one, the ERL, it was here. Yeah, it was not random. This was something that was happening under institutional calculation. Yeah, so that's what I wanted to insist. So you should come to the daily time frame, mark the previous day's high, that is here, this bearish candle. We have ERL, we have external liquidity range there. So according to how, if it will be swept or not, it will determine whether tomorrow the market will be bearish or bullish. Yeah, it will determine if tomorrow we will be bearish or bullish. The closure, if this, there's a liquidity sweep and they run, when the price comes and takes liquidity and closes back again into the range, it means that the market is reversing. But sometimes you find that the market collects liquidity, like it can collect liquidity here, and instead of reversing here, it continues pumping and pumping up. Acceleration, it accelerates. Yeah, that's something that I wanted to insist on. Why is this Larry? You see this today's kind of really bullish, and when you look at the volume of the candle, there's something that you should note. The candle has no volume, but again, it's very big. What does that tell you? It tells you that this movement, it does not have many institutions that have been engaged. Rather, it's the price itself and the how the market works, the mechanics of the market, liquidity. Yeah, because there's no volume. Yeah, so this tells you that something is not normal. No volume, but again, the candle is big. Yeah, so I guess I've touched the most critical part. So anytime you get into a chart, anytime you want to trade, first of all, come to the monthly time frame, look where ERL is lying in your monthly time frame. You detect ERL like this one is here. So don't find yourself trying to buy here without knowing that you are in an ERL. Again, come to the weekly time frame, mark the ERL in the weekly time frame. Like you can see that this week's ERL is in the same place together with the month ERL. But this now, it's not an ERL because this month is currently running. So our monthly ERL is at the top. Yeah. But if this month closes with this week, it means that the ERL will remain to be there. Yeah. So you check the month, you check the week ERL, the low and the high. Yeah. The weeks, you check the weeks of the candles of the month, the week. You come to daily time frame, you mark it, and now you trade in the you check the trend, if it's bearish or bullish in the 4-hour time frame. Okay, like example today, check the 4-hour time frame how it's behaving, because someone has just told me to do an analysis on it. This gold on 4-hour time frame, and what do you note? You note something. Gold has been climbing up and up and up till there until it dropped, and when it dropped here, it broke this structure and then retraced here. When it retraced here, it again dropped again and broke what? It broke this. First of all, it it broke the bearish structure here, meaning we are bearish, yeah, according to the market, because our time frame is still bearish 4 hours. And again it broke the structure here again. So we were expecting when we drag our Fibonacci from this high to low, we were expecting that this market, or the market terms and the retracement deepness says that this market is supposed to reverse at that particular point. Yeah, and it's kind of making a lot of sense, because of when the market reached at that particular point, this rally that was happening lost momentum, and you can see now the market has been consolidating in that particular range. Yeah, no decision, and again something is cooking here, and it's something that you are expecting, though not confirmed. It's kind of in 15 minutes time frame, I see like an inverted head and shoulder pattern that is being formed. Yeah, it looks like, and if it's formed in an optimal entry point of a higher time frame, the 75-79 Fibonacci zone of 4 hours, and it's essential for sales. It's a selling zone, so it's just about waiting and again waiting on this candle, the daily candle liquidity, if it will be laden or collected here. So how this today's candle will close, it will determine a lot if liquidity will be collected or not. It's just a matter of being patient and waiting for this candle to close. Yeah. So with that, I think everything with liquidity is clearly understood by everyone and explained by me. Any question on liquidity before we finish everything with liquidity and never mention it in this class? Anything about liquidity? Any question on liquidity, or you are well with liquidity? Okay. Silence means
Yes,
yeah.
yes, I have a question. Though not related with it today.
Yeah.
I'm asking, when you said they are equal highs.
Yeah.
Like like equal highs.
Yeah.
You said that is internal liquidity.
Yeah.
And also that one now we should have a rejection block.
There's something that you have to understand. Yesterday I talked of allays. What's an allay? Allay. Let me repeat, and I'll do it very fast because I talked about it yesterday. A PD allays. Examples are those rejection block, OB, equal highs. Yeah.
FVG.
Yeah, good. FVG. What else? We have another, the equal lows. Yeah, those are the examples of arrays, the premium and discount arrays. Yeah, this is not the word arrays, but you just understand that. So according to where they happen, if they occur at a premium, you will be looking to sell. Yeah. Again, if they occur at a discount, you'll be looking at for buy opportunities. Yeah, that's all. So when you map liquidity, you first you have to know, am I in premium or am I in discount? You have to know. Then after you know that I'm in premium or I'm in discount, and you do your analysis using, first of all, the 4-hour time frame. We say, we have said that we mark liquidity from month, week, day, and then analysis. Yeah, because a lot of people didn't see this sweep of liquidity from this ERL, or many of us, I thought it was a random stuff. But when I woke up at 3 in the morning and saw that it was an ERL, and I took a buy entry here and I held it. Yeah, I held it, and it had a lot of pips because I hadn't seen that yesterday. So when you see these arrays happening either at a premium or a discount, at a discount, and you see these arrays, they give you the permission to buy because they are discount arrays. At a premium, you tend to see them, you should sell. Don't use these arrays to sell at a discount, and don't use them to buy at a premium. It's the only rule. It's the only rule. And always trade with a stop loss. Never trade without a stop loss. Be conservative. And it's about surviving in the market. Yeah, you survive in the market. How long will you survive in the market? Because then losses, you have to accept that. Yeah, you can have even an year winning a streak and you lose. It's a must. It's a must. Lazima one day you'll fail to see this, it was a liquidity sweep. Yeah, one day you will fail to see it. So yeah, understood, Gladys? Gladys, have you?
Yes.
Okay.
Yes.
So
Sorry, I'm talking.
yeah.
Now get muted.
Okay. So any question, anyone else with a question related to liquidity?
Yes.
Okay.
Nilikuwa nauliza ukimaki hiyo previous candle una
Yeah.
concentrate na high, weak ama body?
What you confirm? Come again, please.
The body of the ama weak.
Or to know if it's a sweep.
Hello?
To mark liquidity.
Ukimark the previous candle, yeah, ni the week ama ni
The week,
candle?
the
Ni body, I mean.
the lowest point of the week. Sasa, ona, check. Let me zoom for you to see it clearly. I've zoomed it. Angalia, this is a weekly time frame. Ona, sasa kama you see this week, kuna this candle here. Let me hii candle iko na hii week. Can you see it?
Yeah.
Yeah. So this candle came, swept this ERL from this from here. Apple. It swept that ERL. After sweeping this ERL, it rallied very hard. Ilifunga, meaning we are bullish in the weekly time frame. Again, the same thing happened here yesterday. Yeah, this candle came and collected the external liquidity below this candle, the weekly candle here. Ikakuja collect and closed hard, meaning we are bullish, and this, it's not a land of stuff. In the next, our next target will be here. Yeah, probably that could be our next target, because yeah, something like that. But kutakuwa na retracement huku ndani. There will be retracements in between. That's how a sweep works.
Okay.
Yeah,
Thanks.
welcome. So any other question concerning anything to do with liquidity and top-down analysis? Okay, so let's move to the most critical thing of today, the footprint overlay. Yeah, that's it. This a weekly time frame, but let's use, I prefer using it from the 4 hours, not the weekly time frame, because the weekly time frame is too strong and tends to give us false signals. Let us first start by setting this indicator. So you search and get the footprint overlay, the bidden, yeah, that one. You come to the settings, set display mode, change from total because it was total volume. Okay, let me explain first. You can choose any, but let me explain what they are. We have something called delta. That's delta, yeah, and you can see that these numbers have the case, here. That's delta. What does delta mean? It shows, it's like it is showing the total number of participants in this candle. The red part showing the sellers and the green part showing the buyers. Again, we have another thing. Let me mark this one here, this number. Yeah, it's 3.1K. Yeah, come to the settings, change to what? Not, yeah. Come to the settings, change to total volume. Again, what do you note? It's 6.1K. The delta shows you the active, while the total shows you the total. The bid and ask, I prefer this one because it shows you, see, here it's 5.1 times 2.1K. The 5.1 here, you see, it's a red zone. First of all, appreciate that, meaning it is a seller's zone. So the first number, the 5.1, represents the number of sellers against the number of buyers. The sellers were many than the buyers, and that's why it's red. Okay, yeah. So that's a selling zone in this candle. We had aggressive sellers who are trying to push price down, and we only had 2.1 buyers in this particular point. It's at the week. What does that tell you? That tells you that sellers here tried to push the price down, but again, they were absorbed. Who absorbed them? And look at the next bar from here. Now we are not here, we are here. Look, we have 10.1K times 13.1K. Again, I've told you the first number here. Yeah, the first number, it's for the sellers. The second number is for the buyers. So this low, we have zoomed, we can't. This low, it's for the sellers. This low, it's for the buyers. Okay, if you look clearly, the values here, this 291, this 4.1k, this 5.1, this is 6.1k. All the values in this the right side are bigger compared to the values on the left side. Why? Because the buyers here were stronger than the sellers. That's why it's a green zone. We've noted that. So let's do some 1, 2, 3 examples so you can see. Look at here. This is where the you saw the price, the market moving aggressively here from this point here. What have I done? Yeah, that is where you saw the price move aggressively. Why? Zero sellers, 0 sellers, 0, 0, 0, 0, 0. No one was willing to sell in the market. Again, 8.1 buyers, 9 buyers, 5, 5, 7, 14, 14, 24. Okay, nice. What do you note? The buyers were increasing until it came to this particular point where you see the sellers now trying to clip back into the market. And you have to note that we are in this is an optimal entry zone. Fibonacci, it's the 79, 75 between there in the Fibonacci tool. And that's why you see this reaction, because the sellers here were trying to push the price down because it's their zone according to the Fib. So you have to note something. The sellers here came here, they were 52.1 times against the 19.1k buyers. That means that the sellers were almost 3 times more than the buyers. Again, price kept moving. The buyers were trying to absorb the sellers here. When price moved up, again the sellers reduced, but again they were in control. 18 versus 10 buyers. Again, the buyers kept pushing. The buyers were buying aggressively. Again, here the sellers were 4.1 times 727. What does that mean? This means that there was exhaustion of the buyers. Why? Hawajafika hata 1,000, they are less than a K. So that's one sign of a reversal. The buyers are now becoming extinct, or they don't have the strength. Okay, come here. This one, look here. It's 6.1 times 0. Again, no buyers in the market. The buyers have now lost control of the market. 7.1 times 896. What do I expect from that one? For me, I expect an acceleration down. Yeah, I expect an acceleration down. Why? No sellers, no buyers in the market. The sellers are in full control of the market. Let's go to the 15-minute time frame. That was just a normal analysis. And look, I told you this is where I expected what? I expected an acceleration from this point to this point. And look, it wasn't, yeah, that was the acceleration I was talking of. From this point to this point. That's an acceleration. The price moved rapid because the sellers now were not, they didn't have any strength to defend their position. So even here, I'm expecting a kind of what? An acceleration of sellers. But again, we have to confirm 15-minute time frame, what is happening using the same thing. Understand this. The 15-minute time frame, and if you look clearly, the values keeps changing in real time. they keep changing in the time. There were buyers here, they were 183 in this 15. Now this 15, it shows the little time movement. Buyers don't have control. You have to agree with me. This candle, it's bearish, only having two bullish zones here. The first one there having 283 buyers and 12 sellers. Again having 180. Yeah, those are buyers now stepping in the market, trying to absorb the sellers. So look here. Here we had 183 sellers and 197 buyers. So if this candle tends to close below this one, yeah, below this one, these are now the buyers trying to come into the market and push a price higher. And again, the sellers here are trying to push the price lower. So if this candle closes below these buyers will be trapped, and we will expect a drop. What these buyers do to avoid losses, now they note that they are trapped. So what they do, they also sell. Why do they sell? They sell to minimize more losses. They sell to minimize more losses. And trust me, if this candle closes below here, it will be an acceleration. Not even below there. If it closes below this point, it will be an acceleration. Why? Because the buyers are right now, as we are speaking, the buyers are already trapped. Why? Prices below them. So it's an acceleration point. If this candle closes below that, it will be an acceleration. Is it making any sense? I told you what? I told you what?
Somehow complicated.
That's how it is in the beginning. But you can see the momentum I'm talking of. You see how the candle is dropping.
Oh yes.
You can see how the candle is dropping. It's
I
this
can
thing.
see.
Yeah, it's powerful, but before you understand, it is complete. Yeah, it's complex. It's complex, but it's one of the powerful tools that I've met. This candle, it's gonna drop and drop and drop and drop. Why? Look at the candle itself. No buyers. Yeah, I understand this thing is complex, and that's why, yeah, even tomorrow we will talk about it. We will, because when you understand this, look, no buyers. These buyers here are trapped. The buyers at this point, this one, are trapped. Yeah, those are trapped buyers. So when they noted that they are trapped, they also sold. Why did they sell? They sold to minimize more losses, and then after selling, you find that some buyers come here. That's it's how the market works. Like you buy, others are selling here. You buy, you see the candle going back, dropping, going back. Yeah, that's how price moves. That's how price moves. Though your acceleration in corner semia in 1 minute. 1 minute shows it. It shows it really good. Yeah, this one. From this, I told you it will accelerate there. That's the acceleration, moving 60 pips in 2 minutes. Yeah, this one is almost ending. Let me send a meet link. We come back, also talk about it for like 30 minutes. Then someone asked me about this tool. Which one? The fixed range volume profile. Also, we set it. Yeah. Let me send the meet link.
Okay.